Hi traders, and welcome to this week's edition of the Keyzone Traders Trade of the Week. This week we're going to have a look at another trade that was issued this week via our Expert Alert service. We've actually extended our Expert Alert service free trial now to 60 days, taking us into 2022. It's for a limited time only, so if you haven't already, please come check out the link below in the box and try out our free 60-day free trial for the Expert Alert service to make sure it's a right fit for you and your trading journey. So this week's trade is on the Euro Yen. Let's go take a look at the charts. Hi traders, so let's go and take a look at this week's trade of the week, which is, as I say, a Euro Yen trade, which was issued via our Expert Alert service on Tuesday. As you can see, this is a screenshot from our Discord channel where you can see that I put the order clearly in with the entry, stop, target with an expiry time of the trade. I then alert people to when I'm triggered into the trade, and then also when I make any management on the trade as well. So with that, it's fairly easy and basic instructions. There is a process that you have to learn, which is all in the learning center of our Expert Alert service, which again, click in the link below and you can come and take a 60-day free trial to our Expert Alert service. But let's go and take a look at what I was looking at and what I saw in the markets and why I took the trade. So Euro Yen, we had this move down here. We had an impulsive move down. It was very corrective, and then we got quite another strong impulsive move down. But as I keep mentioning in these reports and my daily recaps, if you just pull across there, you can see we've got a lot of support from here. We had support here, we had support here, and we had support here in this support zone. We look at our support and resistance in terms of zones, not just a one ideal level. So we had a zone of support there. The market pushed impulsively through it, and it didn't hold the level. It didn't hold the break below the level, and we put in quite a nice bullish candle back above the bottom of that zone. Now, that's the first signal. That's the pattern that I'm looking for. I'm looking for what the market's doing there is it's grabbing liquidity. It knows there's liquidity there. It knows that there's going to be stops in place there. This is why so many retail traders get stopped out of the market only for the trade to reverse and go straight to their target. So it's done its liquidity grab. It's trapped a lot of traders who may have been long, and then it's going to go and do exactly what people would have expected it to do. So this is how I take advantage of those scenarios. I look for these signals, look for the liquidity grab, and then I look to take the reversal of that. Now, that's the pattern. I also try and tie it in with higher time frame context, and as you can see, the bottom of this is around the 48 to 58.60 area. Now, when I'm looking at the hourly chart, this signal was on the hourly chart. I look to the daily for higher time frame context, and as you can see from this here, the zone is right on the daily moving averages. With the market bullish overall, we've had this really strong up. This is a corrective move back. It's connecting with what can be dynamic support, the 20 EMA. So the higher time frame context is also supportive of more upside. So with that, we're only looking to take 1-to-1 on these trades. We entered here on a break above the candle. The high of the bar was at 69.2. As I say, our entry was at 72 here. There. Our stop was below this candle. Excuse me, bear with me 1 second. Our stop was 27 points. So it was down at 45. And we had a target of 27 points as well, which was up at 131.99. Apologies. So that was the trade as per the instructions here. Entry 13172, stop 27 points, target 27 points. And as you can see, great replay function on TradingView, which allows us just to go then and see what happened in the market. The market little retracement, and then just starts moving directly towards our target, and within little over 2 hours we hit our target. So a nice quick trade, very little heat, pretty much a textbook setup, having taken the liquidity out with the higher time frame context, and then it just enters the trade and moves nicely to our target. So that's our trade of the week, guys. I hope you are finding these useful and seeing what I'm looking for in the markets, and I'll speak to you again next week.